Now is Bolvin Wealth Management Group President Gina Bolvin. Gina, what do you think? Is the beginning of the second quarter indicative of what we're supposed to expect for the rest of the year?
It's been a great year, Maria. We've been expecting a pullback. Yeah, so we've been expecting a pullback. We're starting to get one. I think it's a great opportunity for investors to get in. This is all coming on the heels of a very hot CPI report, hot retail sales, the consumer's still spending money, interest rate cuts are getting pushed out. And the reason is because it's a strong economy. So I think it'll be a good year for stock investors.
Where do you want to allocate capital then in that regard?
So what we're looking at right now, Maria, is we really like technology still, large cap growth. They've been offensive, and it's also a defensive play. They're not interest rate sensitive because they have such strong balance sheet. They're not relying on credit to make money. We also like comm services, and Netflix is coming out today after the bell. It will get some insight into technology earnings, which are coming out next week, and we balance large cap growth with some of the energy sector. We like that. We see strong demand for energy.
Mark, jump in.
Well, so one of the things that a lot of clients have been asking lately is, how can I get into the AI play? How can I get into the Ozempic play? And the one thing I would want to mention is that as an investor, you want to see the forest for the trees. You don't want to miss the derivative or ancillary plays that would benefit from AI, such as nuclear energy. We're going to need more power to the data centers. Data center REITs would be a good opportunity within the AI subsector. Then you look over to the Ozempic GLP-1 weight loss drugs. What about Becton Dickinson, the world's largest syringe maker? So there's so many ancillary plays out there right now that I don't know that enough investors are really considering because they're focusing on NVIDIA, Eli Lilly, right? So I think it makes sense to kind of broaden out and really see the other beneficiaries and the other companies that are going to get hurt from these big major investment themes that are playing out.
It's a good point. Gina, do you think we will see a broadening out? I mean, for example, I've been waiting for small cap stocks to get a bid for a while now. A lot of people saying small cap stocks are where you want to be. That's the broadening out that they're expecting. It hasn't taken hold yet.
Well, there has been broadening out, right? We've seen financials do really well, materials, industrials, small cap stocks, though, man, they've had a tough 3 years. They haven't done much. The reason is they're interest rate sensitive. We've recently upgraded from underweight to neutral with small caps, but I wouldn't, most of small caps are unprofitable companies. I wouldn't put more than 5 or maybe 10% of your portfolio in small caps anyways. So I think it's going to take some time. Mark, regarding the AI question that you had, I think that this is a huge technological revolution, and this is going to affect all stocks and make so many companies much more profitable. And it's not just about NVIDIA.
All right.
Although that's the poster child.
Well, for sure, for sure. And we just saw a graphic of the second quarter numbers where the major averages are down about 5%. That was the beginning of the realization that the Federal Reserve may not be there with all these rate cuts. I think, after, as you said, the ISM number and a hotter than expected CPI number. Gina, it's great to see you this morning. Thanks very much.